Three, two, one.
Boom. Welcome, ladies and gentlemen, to the Build and Grow with Real Estate show. My name is Judah Hoover. I am a real estate investor and a realtor. This guy right over here is Josh Weidman. He is a hard money lender and a real estate investor. And today, did you ever like the movie or the book, Mrs. Frisbee and the Rats of Nim? It's also called The Secret of Nim.
I love, dude.
Moving day.
That was
for Josh is moving day.
Listen, The Secret of Nim was one of my favorite cartoon movies when I was a kid. I love that. But yeah, it's moving day. That's
moving day for Josh. The house that he is rehabbing isn't quite done, so he's moving into an Airbnb for 2 weeks, 3 weeks. What's the story?
Well, we have it for a month.
Oh, okay.
I'm going to be moving as quickly as humanly possible.
Right. Outstanding.
Yeah.
So for those of you that are new, this is the Build and Grow with Real Estate show, and welcome to all of our listeners. Check us out here every Monday, Thursday, and Friday throughout the week. Monday, we do content and teaching and preaching on what we think is important in the real estate world. Thursday, we have an awesome guest on, and wasn't our guest yesterday out of the park, amazing. And then on Friday, we talk about news of the world. We talk about what is important, not the headlines, not, what's going on with the, impeachment or on Capitol Hill or whatever, but real estate related news that used to get talked about, but doesn't get talked about anymore because all we talk about now is politics and wars.
Yeah.
And so we're interested in discussing what's actually happening more than what the Kardashians are doing. And we important because then you can take these nuggets. Here's the dirty little secret. We've probably never talked about this. Our goal is to make you sound smarter when you talk to people.
Yeah,
so that when you're at parties, when you're talking with friends and family and they say, hey, what's going on with one of the things we're going to talk about today is Zillow. Hey, I just heard Zillow bought something. What does that mean? Is that good, bad, and different? And you might have an opinion that differs from some other people, but we're going to talk about what that is and why that's important. So this show is geared for people who are real estate investors and people who make money from the real estate trade. So realtors, closing attorneys, title companies, anybody who does anything having to do with real estate as your living, and anybody who does anything with real estate as an investment.
That's right. And when we jump into our news, Steve jumped in here and he said, please, no politics. Listen, this is politics light or free, right?
Right.
It is COVID light or free.
Right.
It is most of the stuff that you're going to see streaming on your Facebook stream, and it's controversial. None of that. We're talking about real estate related things in the news this week.
Josh, that's money on the line. You got to take that call, buddy.
Dude, it's my sister. She's checking in. Anyway, here's the point. A lot of the news that you read or don't read is really relevant to the real estate industry. Sometimes it's COVID related. Sometimes it has to do with politics. Sometimes it has to do with, your crazy uncle down the street and what he thinks about real estate. But at the end of the day, we're only going to talk about it if it matters to you and it's relevant in the situation. Right now, none of those hot topics or controversial topics are in the news. So let's get started. Like the big news for today is that Zillow is set to purchase Showtime for $500 million. Now, Judah, I would love it if you would start off just telling us a little bit about Showtime.
So here's what happens. So Showtime kind of marries up with the MLS, right? The MLS is the multi-listing service, and there's different MLSs across the U.S. They're kind of geographically, regionally based. And Showtime is an app that marries up with that. So if I wanted to list 123 Main Street, let's say Josh comes to Judah and says, hey, I want you to list 123 Main Street. I'm going to list it on the MLS, and all the realtors out there are going to be able to see it so they can talk to their clients about it. There's going to be pictures there. There's going to be all that other stuff. The old way of doing things was call Judah Hoover or fax Judah Hoover or email Judah Hoover if you want to schedule a showing. And maybe I would take the call. Maybe I wouldn't take the call. Maybe I was a big fancy realtor and I'd have to have an assistant take the call. with showing time, what happens is Josh just says, hey, I want to see this property 123 Main Street at 2 o'clock on Saturday. Doesn't look like there's any, and the computer just keeps track of when there is or isn't a showing. And then myself or Josh can approve that or not approve that. And then we know what it's happening and what's going on. And it just keeps track of all that. So it's a booking app that does all of the work of just keeping track of all that, and it streamlines it and makes it a whole lot easier. It is a beautiful, beautiful product.
Okay, so here's why this is important, right? I don't know if you've ever seen this meme, Judah. It says like, I think it's a quote by Elon Musk. If it's not, it's by another billionaire. He's like, look, figure out where you'd like your life to be in the next 10 years. And then figure out how to do that in the next 6 months. Right. These big tech companies, and more so these visionaries, you see it in tech a lot because they're disrupting industries, right? They step in and change the way an industry is acting or reacting. And I think that Zillow stepping into the, I think it's called Zillow Homes, and Redfin has an iBuyer program. But a lot of these tech companies are stepping into a retail space, and they're saying, how can we do this better and different? And the truth is, we've talked about this a couple times over the last couple months. But I think that what the big change here is that they're taking a decade of transition. And with this purchase of showing time, I mean, the National Association of Realtors is a gigantic power. They represent millions of real estate agents across the country. They have a huge amount of swing. They've got a lot of money behind them, and they are a fierce adversary when it comes to making changes, right? Steps like this, it just took that 10-year transition, and it didn't make it 6 months, but it sure as heck is not 10 years anymore.
Well, yeah, and so it's a way that Zillow can, again, start to control the showing process and also own that showing process. And there might be other companies that come out of the woodwork, but for streamlined purposes, one MLS has one showing partner lined up with it. I'm not sure if there's other showing times that are used across the US. I know we use Show Mojo, which is a similar thing for our rental property showings.
Yep.
So there are other pieces of technology out there like this that the MLSs might gravitate towards, but this is one of the things that is showing. For 10 years, people have been saying Zillow is coming. Why are you giving them money for leads? Zillow is coming. Why are you giving them money for leads? And what we're seeing now is that they're actually making steps to get there. Now, we need to research this story more. There's a whole lot that we need to find out about, and there's a whole lot more to talk about here. However, this is Zillow continuing to show that they are not done yet. A lot of people said, well, maybe Zillow's here and they're only going to here, or they're only going to here. And some people are like, no, Zillow's going, they're coming for the whole cake. This is Zillow taking a more aggressive step into, frankly, this doesn't actually put any realtors out of business, but it puts Zillow in a position where it can stranglehold the industry.
I look at this, Judah, as almost like a shot across the bow. I think that with all of the strength that the National Association of Realtors and all of these local NAR groups, all the power that they haven't done much to protect what they have. And I think this is really a predatory move from Zillow. And I don't say that in a negative sense. It's just like they're going after it.
It's an aggressive capitalistic approach. Yeah. And the only reason that you would be concerned about this is if you worried that big tech could potentially act maliciously. And I don't know in the last 3 to 4 months that we've really seen big tech do anything malicious or bad or anti-consumer or clamping down on little guys' voices or anything like that. So I think that this is just fine, and we don't have to worry about it.
Well, you know what this reminds me of? This is on par to the builder of carts, of horse-drawn carriages. If a car manufacturer came in like 1905 and said, we're going to buy the patent on that machine that rolls the iron around the wooden wheels. And it's like, oh yeah, it's not going to stop them from building carts, but guess what? Those wheels are going to last no time compared to the auto, the auto industry. This is a serious play. And if it's not taken seriously by agents and members of the National Association of Realtors, it's going to end badly for them. And I hope.
And I just want to be 100% clear. I have thought for a long time that 50%, and that's generous, of realtors do little more than take up space. So if there is a thinning of the herd in the real estate space, I think that's fine. And I think there will always be a space for good and excellent and potentially even mediocre agents. I just booked a trip to Cancun, and then because of COVID and things like that, decided to push it back. I was going to be leaving on Tuesday. We booked it like 5 months ago. We were going to be leaving on Tuesday. We pushed it back another 3 months. And I just called my travel agent and said, hey, find me a similar resort on these dates, not these dates, for a similar price. I don't want to pay anything more, blah, 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 blah. And it's a party of 6 adults and 8 kids. So it's a huge deal. And she was able to work her magic that we didn't have to pay one more red cent to make it happen. The only reason I tell all of you, the reason I say all that is there was a time when travel was heavily regulated.
Yeah.
You had to buy through a travel agent. And they thought that if we let people buy directly, buy airfare directly through and, to themselves and other things like that, for consumers directly themselves, that it's going to wipe out that industry. Travel agents still exist, and travel agents still serve a very, very valuable purpose and a very, very valuable service. But you know what? If you want to, you can also just say, I'm going to see my brother in Miami this weekend, and let me just log on to, Priceline.com and see, if I can get a cheap flight.
Yeah. Yeah. And you know what? A lot of people do that. Between Airbnb and cheap flights and all that kind of stuff, there's definitely room for really good, qualified, travel agents. But if you're just there taking up space, you're not making any money, right?
Here's my take on this, and we'll talk more about this. You don't have to be nearly as panicked as some people are. You shouldn't have your head nearly as much in the sand as some people do. And also, prepare for change, but also there's no reason to sharpen the spear of the guy who's going to stab you.
Right.
And that's what a lot of agents have been doing. They've been sharpening the spear of the guy who's going to stab you. So don't panic. Don't put your head in the sand. Prepare yourself for change, and that's a good thing.
Yep. Stop
freaking sharpening Zillow's spear.
Right.
Those are my 4 takeaways on this on this news story.
$500 million. That's a drop in the bucket. If you're National Association of Realtors, that's one property you did not. That's like when the dude lands on Park Place and goes all in with his cash, and you're like, oh man, I hope he doesn't get, the other one.
And guess where that money came from? $500 million from realtors. That's money realtors gave them.
Yeah, right. All right, let's move on. Okay, so really interesting news. I'm gonna start. I'm going to jump in with the only negative news article of the day. Okay. This is not published anywhere. This is from my Facebook feed.
Right.
That is the reference on this. But I got this from another lender who posted, he said, I'm getting all of these applications from new investors. And he's like, the guy does commercial and hard money lending, right? He says, in the past, investors contact me. I talk them through the process. They're coming to the table with the purchase price and renovation costs. At least they know what they are, and we're putting together a loan product for them. But recently, a very large percentage of the people that have been coming for loans have no reference to construction. They don't reference it at all. And these are fixer-up properties. And, the guy was digging in a little bit. And what he said was, here's what I'm noticing. A lot of new investors are jumping in to rehab properties. They don't understand construction. They don't really understand real estate investing, and they certainly don't understand rehab financing. And in addition to that, not only are there inexperienced investors, who comes along with them? Inexperienced agents. Agents that haven't done very many transactions. So you've got the blind leading the blind here.
You forgot the third thing here, Josh.
What?
Inexperienced hard money lenders. I loved it. Well, I mean, when I was in the hard money space, I saw a lot of that. Dude. People were like, "Oh, I can't." Now, at the time, we're at a different time right now. But at the time, I was 6 points if it was your first loan with me, 5 points if you were a repeat lender, and 15% interest.
Right. I know.
And that's where I was. And there was people who were telling me all the time, "Oh, well, I mean, I can find money at 4 points." Or 12%, or there's this one guy 10 and 2. Didn't you love it even back then? There was 10 and 2, and what about that? I said, okay, great. They'll be out of business in 6 to 8 months. No worries. Go ahead and get money from them, and hopefully you can get the second and third draw. But they're going to be out of business. There's just no doubt about it. And so there's a lot of people who have made money from real estate who are then also like, geez, I'd love to make money and not have to do anything and not have to stress out about these business decisions. And what they don't realize is, if I give Josh the money to do a deal, whereas my last deal, I was the one stressing out about what type of carpet to pick and this and that and the other thing, you can't just write Josh a check and think that there's no stress, because if I write Josh a check, I should be stressed about what color carpet to pick, and also, is Josh going to be the one who makes that right color carpet pick?
Well, right.
There's twice as much risk, twice as much stress if you're the lender.
Well, so all right, so you've got this lender saying this, right? And the reason I even brought this up in our news segment is that I've recently been feeling a lot like 2006, in that in 2004 I started paying attention to the real estate market. Right. And I'm looking around and I'm seeing all these huge homes going up, all these McMansions. And at the time they're like $400,000 or $500,000. And it's not like 3 or 4 houses in a neighborhood. You got 50, 100 houses in these large developments that are coming out. And I'm going, man, are there really that many people that can afford a $400,000 or $500,000 house? I mean, and at the time, what were interest rates? Like 6%, right? 5-6%. Right. And they were the lowest ever at the time. Okay. So then things just keep plugging along. And then 2006, I start looking around and I'm like, this looks like a pretty good market to invest in. There were no major red flags. There was no explosions. Nothing happened. And so I thought, you know what? This is a great time to jump in the market. Well, a year later, what happened? And I'm not saying that that's the case, but I keep looking at the indicators for our current market and looking around and saying, these are good. We've got low interest rates that are going to stay for a while. Demand is up. Supply is low. There's a lot of positive things happening in the economy. I guess the reason I put this in our slide deck is just to say, hey, guys, no matter how good things get, remember 2007, 8, 9, 10. Just remember it. Keep it in the back of your mind. And when you start speculating, realize that there's a real chance of loss. That's it. That's it.
Right. And remember, speculation is doing a deal based on what the numbers will be instead of what the numbers are.
That's right.
So if you buy a $100,000 house that's going to take you 6 months to rehab, and you buy it for $50,000 and you put 20 into it, that's a good deal. If you buy that $100,000 house for $60,000 or $70,000 and put 20 into it, knowing that it's going to appreciate $20,000 or $30,000 while you're doing the rehab, that is called speculation.
That's right.
That is a recipe for disaster. And eventually the merry-go-round stops and people don't have enough seats.
That's right.
So what you need to do is just make sure that you are focused and disciplined on doing good deals in good neighborhoods that you are not speculating on. And as long as you avoid speculation, you'll be in great shape. What's our next slide, Josh?
All right. Listen, that's the last bad news of the day. Let's jump into some awesome news stories. All right. Robot underwriting.
Robot underwear?
Robot
underwriting.
Underwriting.
That's much less scary. Robot underwear is pretty scary.
So during COVID, the most valued team member and sought after professional in the mortgage industry became the underwriter, right? Nobody knew where things were going. We got to bring in an expert to tell us that everything's going to be okay. Well, high salaries, high volume, ton of applications, and slow turnaround time became like the industry standard. And, in this article that I'm reading, they're like, yeah, by July and August, minimum turnaround times were 60 days on a loan, right? And we all saw this. You saw if you were trying to get a loan for under $100,000, good luck, right?
Yeah.
Nobody was lending.
I tried to package two up together so that there would be over 100 eminently qualified borrower, and it took like three. I mean, I'll have to check the numbers, but it was either 3 or 4 months to get it done, and there you go. Nothing wrong with it. It's not like, oh, well, it kind of didn't appraise, or the borrower's spouse kind of has a funky job or whatever. Like, it was a clean deal.
Right.
But because of where the loan size was, it took me 4 months to get it done.
All right. So robots have entered the scene. The mortgage AI firm Candor, they started implementing automated underwriting. And essentially what has happened is it's a hybrid between human only and human computer analysis. So essentially the basic underwriting is done by the AI system. And then the information's turned over to a human to review, approve, deny, do whatever has to be done. What has happened here is that the turnaround cycle for underwriting these loans has gone from 60 plus days to 18.7 days per loan. It's increased productivity by 20% for their underwriters, and added an additional $4 million in volume for every 100 closed loans. So it's increased their average loan size.
Right.
They're able to process them faster and and get more done in that time frame. So I
got to dig more into this. I got to talk to my mortgage friends, and maybe if you know more about this, you can reach out to me. But what you just described, computer underwrites and then human approves and double checks.
Yeah.
It's what I used to do. I used to run every loan through Desktop Underwriter, DU, or Loan Prospector, LP, if it was, Fannie Mae and Freddie Mac, they each had their own, and you just ran it through. And if it got approved, then all you had to do was the underwriter just had to verify, look, I told the computer they make $50,000. Here's me saying they make $50,000. So maybe I don't know, some of that is somehow automated or something like that. But that sounds very much like what they already did. Okay,
so the biggest difference between AI, which is actually machine learning, right, and a program that says, okay, you qualify, you don't qualify, is the way the rules are set up. And so think about it like this. When you're learning to ride a bike, you could have somebody that hands you some rules and they're like, okay, you keep the bike balanced, you ride, push the pedals with your feet, steer from side to side. All right. Well, the first time you jump on a bike, even with those directions, you're going to fall over.
Right.
Guaranteed. With AI, they're starting with no instructions, or maybe some basic instructions. But then they're tracking these loans, and it's like, oh, I'm noticing something that people from this profession maybe don't perform as well on their mortgage. I don't know why, but it's part of the data set. And so over time, over 1 million mortgages, now all of a sudden, they're able to more accurately predict success based on the data points that go a lot deeper than just like a standard.
Data points like that are absolutely crazy. I remember talking to an FBI agent once, and I forget if I shared this on the air. He was like, yeah, I used to do profiling for the FBI. And he's like, oh, like, you're the guy who came up with the, white, middle-aged male, blah, 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 probably committed this crime. And he looks at me and kind of smiles like, yeah, that's cute. And I was like, what do you mean? He's like, Judah, we're the FBI. We have the statistics on every crime that's ever been committed in America ever. We have those statistics. And so local PD calls me and says, hey, this is what happened, blah, blah, blah. I run it through the computer, and I can call him back and say, there's a 38% chance that the guy is a part-time pizza delivery guy, and there's a 85% chance that he drives a green Honda Civic.
Yeah.
And I was like, wait, how would you know that he drives a green Honda Civic? I don't know. I don't care. It's just what the data says.
Well,
so
just
therefore,
remember,
we don't have to know why the numbers work. We just, they just know that the numbers work. And so, yeah, when you can get big data sets together and look for patterns, it's amazing what you can find.
well, and okay, so remember that government technology is about 40 years ahead of normal tech. So maybe they've been using machine learning for the last 40 years. Who knows? Regardless, the point is, robots are going to start underwriting your loan. You need to start speaking C++. All right.
Plus.
There we go. All right. Another good news. Rental payments are up in February. Through February 9th, right? These statistics were through February 9th. 79.2% of renters have paid their rent, or at least partially paid their rent. That's good news. I mean, 80% on track. Awesome.
And I can tell you just from experience with my data set, partially paid their rent, 90% of those people they've paid 90% of the rent. You know what I mean? If they say they've paid some of the rent, it's a $750 rent and they paid $700 of it or something like that.
Well, but here's a huge part of this, right? If you're paying part of the rent, you're not trying to get evicted. You're making an effort. And you know what? If you can only pay half because you're out of a job or you're having a hard time or your hours got cut, people understand that. Right. They get it and they can deal with it. That's a big deal. And getting those workouts and preventing a mass, a mass flood of evictions is a huge deal when it comes to stability of the housing market. So this is great news. These stats were taken from 11.6 million units that were market rate units across the country. Right. So, I mean, good news on housing. I love it.
Yep, absolutely. Yeah, I think I've told this to anybody who would listen to me as opposed to what the news says, that by and large, we are not having problems with people paying rent.
Yeah. All right. Piggybacking forbearance news, right? The FHFA extended forbearance benefits on primary residences from 12 to 15 months. Here's why this is important and is a big deal. The longer we go from the start of the COVID shutdown.
Now, stop.
Yeah.
FHFA is the Federal Housing Finance Authority, and it is the agency that owns, for lack of a better term, Fannie Mae and Freddie Mac. Yep. Fannie Mae and Freddie Mac are the agencies that provide the liquidity to all the banks. So if you want to invest in the mortgage industry, you buy bonds from Fannie Mae and Freddie Mac. They sell the bonds, and then they take that money and they buy the mortgages from the bank. So the bank makes a $200,000 loan to Josh, and then they sell that out the back door, and Fannie Mae and Freddie Mac buy it for $198,000. So the bank keeps that $2,000 as their fee, and Fannie Mae and Freddie Mac earn the interest over the life of the loan, and that's how they then also profit themselves and pay back the bondholders. We should come up with a chart on how the secondary market works. So FHFA is the agency that then controls Fannie Mae and Freddie Mac.
Here's why this is important, okay? There was, what were they saying, 20% of property owners were in forbearance at one point. It was a really high number in August. The longer we go, the lower and lower and lower that number gets. People are adjusting to the new normal. They're selling their properties if they can't bring it current. They're when they go back to work, they're bringing their mortgages current. So you have fewer and fewer Americans in forbearance to begin with. Second part of this is that not everyone enters the forbearance system at the same time. Right. During the shutdown and during the lockdown, FHFA offered a 12-month moratorium or forbearance on mortgage payments. That's been extended to 15 months. But whether that you started in June of last year, or you started in December of 2020, or you started in January, you have 15 months to get your house in order to, to get things rolling. That's a big deal. It's a very good thing. It staggers any foreclosures that will occur so that they're not all lumped in a month or two. It's just a good thing for housing. And it's great news. Let's see here. New mortgages. Boom. Dude, $402,000 average mortgage amount.
Yeah, I can't believe that. That's crazy because when I was in the mortgage industry, for about 10 years, for about 15 years, I was in the mortgage industry. For the last 10 of those, I owned a mortgage company with a couple of partners. 417 was the jumbo loan limit.
Right.
Time, 417. And it was weird that it was 417. There was also a carve out for like Hawaii and California, I think. So, but 417. What are current jumbo loan limits? I should Google that while we're on the show here.
Well, the thing to consider here is that at $400,000, you're likely to be putting down more than 10%, or certainly more than 3%. That's really deep in the median home price. So you got a lot of people moving up, and if they've got a $400,000 mortgage, they probably have a $500,000 purchase price on that house or close to it. I mean, that's really something. I mean, you're talking about a jump here.
548, by the way.
What is that?
548, 250. 500,000, $48,250. So basically, 550.
Well,
that's the current jumbo loan limit. Sorry.
Oh, got it.
We're doing other math, and I came in with an answer, and I apologize.
Okay, no problem. All right, so here's why this is important on two fronts. Number one, because of the loan size, it is very likely that homeowners have an investment of equity in these properties.
Correct.
Whether they're refining or they're buying. If the average is 402, that's up like $40,000.
Right.
From the last high. It was like 357 the last time I looked at it. I mean, that's pretty significant. And it's strong growth. So, I mean, dude, just keeps getting better.
So what you're saying is, we talked before, and it's important that everyone pieces this together, even though we talked before about how this feels like 2006, it feels like 2006, but it's not a bunch of hot air like 2006. It seems to be strong fundamentals underpinning this economy.
That's right. All right. One fundamental that's not so great. We've got a lumber crisis right now in, that is really impacting home builders. So a couple things here. First and foremost, we had $3 trillion pumped into the economy last year, maybe more than that. We had $1.6 trillion that's about to be pumped in the beginning of this year. That money has to find a home. In the beginning, it's going to find a home in asset prices, but those asset sales are going to trickle down into the real economy. We already see a push for the $15 minimum wage, right? And I think that is going to play in very well with the increases across the board in living expenses. So I think what we see with lumber prices, essentially what happened was you had all these shutdowns during COVID, and lumber mills and lumber companies, they closed because of, and especially in Canada, there was even more restrictions than we had in the United States. So we had no supply chain. Things start opening back up. There's a huge demand for new housing and remodeled housing. What do we get? We get much higher prices. We got 300% increases in some places in lumber prices.
So, but here's why I'm surprised that this is drug on for as long as it has, but I'm not long-term freaking out about this because the price of the raw material is still the same. And there's more trees in North America than what there was 150 years ago. So the price of the tree is the same. The price of the final product has gone up 300%. So that means the margin, because of supply and demand, is much larger than what it was. So that means that more people are going to be entering that market and filling that and trying to solve that problem, chasing that demand, which is going to raise supply, which is going to mean that supply meets demand and prices come back down.
Potentially. I mean, I think that if it's truly a supply chain issue, yes, I agree with you. But I think that this is more indicative of coming inflation across the board. And I think that we will likely, several years ago, I mean, this is around 2000 and probably 2003, 4, 5, whatever. We had a huge spike in oil prices. Overnight, literally, they went from like 250 to 550. Okay.
Right.
I had a construction company at the time, and I had a deck that I was buying, and it was composite.
Oh yeah, the composite material just went through the roof.
Overnight,
right?
The cost went up. I had a printed quote that I got maybe on a Tuesday. On Wednesday, it was 3 times the cost. Right.
Right.
And then prices came back down.
Right.
But then they rose right back to that other level. It was like. Right. Okay, gas prices came down. It was almost a test for the market. And I kind of feel like lumber, you're not going to not buy lumber if you have to build something. You have to, right? I mean, we went through this with Hetrick, right? Our lumber budget was $2,500. Right now we're about 10 grand, So they're real life dollars that test the market. They pull back when you have that increased competition. But then at some point, it's just like, the price is the price. You're paying $7 for a 2x4, you know? So I think that, we've got a little bit of both going on here. We'll see how it plays out.
Yeah, it used to be that 2x4s were, 175 to 250, and now they're $7. It's just absolutely crazy what you're paying for 2x4s these days.
That's right. Okay, last news story of the day, man crush news story of the week. On the 8th, what is that? Tuesday? So the Monday or Tuesday, Tesla comes out and says, "Hey, we're going to buy, or we bought $1.5 billion worth of Bitcoin, and we're investing into other cryptocurrencies." Well, what happened? The price went up significantly. Went up. What is that? About $8,000 over the course of one day. Which was pretty doggone significant. And anyway, Elon Musk is credited for raising the price of cryptocurrency. What can he do?
Right. Yeah, I think that we're seeing more and more credibility into the crypto world. And I think that it is definitely a space that is worth some of your time, effort, and energy. We're real estate investors, so that's always where my the majority of my holdings and effort and energy, be it directly or indirectly, or the paper game, which is what I really like, or other things, going to be around real estate. But just like I tell people, it's a good idea to have 10% of your holdings in gold, actual physical gold that you could touch, or other precious metals. I think that it might be a smart move to. I no longer believe that it is as speculative to hold some of your wealth in cryptocurrency.
Well, and if you are buying Bitcoin, you can spend it. Tesla is saying that they're going to accept Bitcoin as a form of payment. PayPal's already doing that. It's pretty interesting how this is coming into the mainstream more and more and more. I'm interested to see what happens with volatility as time goes on. Because an 8% or an $8,000 jump, what is that? About 20% overnight.
Right.
That's a big jump.
These numbers are getting so high, though. Bitcoin's going to have to do something like they're going to have to. Why can't I think of what stocks do when they split? I mean, they're going to have to do a split or something here.
Well, that's why Bitcoin is so in demand. There is only a certain amount. And
right, I know, but they can still split it and still have the same theoretical number, but that way you're not trading so much fractional shares. They should.
You get one hundredth, 1/10,000th of a Bitcoin for a candy bar.
Right.
Anyway, all right, that's all I got. What do you got going on this weekend? We got Valentine's Day. You got big plans for Valentine's Day?
Dude, I'm a single dad with 4 kids, and I drive a minivan. I don't have Valentine's Day plans for the next 10 years, Josh.
Yeah, I get it. I get it. Yeah, I know. Mine are just as exciting. I'm cleaning carpets and getting this place ready to go.
Right, exactly. Hey, listen, I appreciate everybody being here. We're going to be back on Monday with with a lot, another great show where we're going to be focusing on content. We're going to be talking about what you can and should be doing. We do a lot of teaching and preaching on Mondays, and then Thursday we've got a lot. Like the next 5 or 6 weeks, we've just got great guests lined up, and I'm very excited about them. And then we'll be back here on Friday to either do more content if we feel there's content to talk about, or if there's news that's worthy to be talked about, we'll be talking about that. And definitely keep an eye on this Zillow story because it's going to be what we're talking about.
Awesome. All right, guys. Have a great weekend. Thanks for joining us. Don't forget to like and share the show. We'll be back here Monday. Take care.